Hello and welcome to another video on my YouTube channel. My name is Joris and welcome to the sixth part of this series about European ETFs that invest towards Europe. And in this video I'm going to talk about one large cap ETF and three small cap ETFs. And one of those you will have already heard about in the previous video. So in part 5 already mentioned the DFE ETF. So that one is returning today. But you know the rules. It are European ETFs that invest into Europe. So they invest in European companies that are based in Europe as well. So they are all UCITS ETFs. They distribute a dividend and they are not synthetically replicated. So far I have already discussed 31. So today there are going to be 3 extra new ones. So that brings the total then to 34 ETFs discussed in this series so far. And if at the end of this series you know of any other European based ETF that distributes a dividend and is not synthetically replicated besides the 41 that I am going to discuss in all 8 videos of this series, please comment the ticker or the ISIN code in the comment section down below, and I promise you in the next series, when I revisit this series next year or so, then I will certainly take up your ETF that you suggest as well. In the first 2 videos I discussed the most common indexes, so the MSCI Europe Index and the Euro STOXX 50 Index. And in the next 6 videos I'm going to try to group the ETFs as best as possible. So in the first video I grouped the more diverse ETFs, so with 400 up to 600 companies. Then I grouped the quality dividend ETFs. In the last video I grouped the high dividend yielding ETFs, and in this video I grouped the small caps and the large cap ETFs that I found. And then there are 2 more videos to follow in this series, so stay tuned for those. And as you know, all the numbers that you see appearing on the next slides, they are all from the end of the trading day of 11th of July of 2025. It's Sunday now for me, so for you I don't know when I'm going to publish this video, but it's going to be way ahead in time. So by the time that you see this video, maybe already 1 week and a half, 2 weeks are going to be past. So just keep that in the back of your mind when you see these numbers appear. And I'm going to start with the large cap ETF. It's the IQQG from iShares with a total expense ratio once again for iShares of 0.40%. And it's the total market growth large UCITS ETF. So large here has a reference to the large cap companies where it invests its money towards. And you can buy that one on the Xetra stock exchange for 62.61 euros a share. The dividend is being paid out in euro and it invests towards 43 companies. There is 311 million invested towards this ETF and it's a fully replicated type. The past year it is up 3.65%, so not that great at all for the past year performance. The past 3 years it is up 52.36% and the past 5 years it is up 64.31%. It pays out quarterly dividends and the dividend yield was 1.04%. I believe that's the lowest percentage that I'm presenting in this series, so it takes the crown for that, this IQQG ETF. There is one ETF that doesn't have a dividend yield yet. That's coming at the end of this series, so stay tuned for that as well in the 8th video of this series. But this one has the lowest dividend yield of all the 41 ETFs that I'm mentioning in this series. And you can also see that in the past 3 quarters it in fact missed its dividend payments. So it paid out 0 euros. Only in the last quarter, in June, it paid out finally a dividend. And yeah, I don't know what is going on with this one, because there needed to be a dividend payment, in fact, in those quarters. But on the iShares site, it was also mentioned that there wasn't a payment on those dates. So maybe I was wrong, but I truly went to the iShares site, looked up this ETF, and there weren't any payments there. So truly amazing, but this is the way it is. Then you have the UBS Fund Solutions MSCI EMU Small Caps UCITS ETF. So the first small cap ETF. It's the ESCEUA ETF. Really long name, but UBS always has long tickers, especially here in Switzerland. And then you have the UEFD or UB69 ticker. And the UB69, a lot of people love this ticker symbol, of course, but that's for other reasons than for investment reasons. Total expense ratio is 0.28%, and this is one of the funds that UBS decided to lower the total expense ratio of. So it used to be 0.33%, and they lowered it with 0.05%. So that's really nice of UBS that they did that. And it's also small cap, so I think it's really good that they start lowering the total expense ratios for small cap ETFs as well. You can buy one share for 140.44 euros on the SIX stock exchange, and it invests towards 378 holdings, and there is also 378 million invested into this ETF. So maybe when they add a holding for every million that is invested towards it, I think it's just a coincidence, but it's nice that it's 2 times the same number. It's a fully replicated type, and in the past year it is up 16.26%, the past 3 years it is up 41.84%, and in the past 5 years it is up 73.60%. So when you look at those numbers, only for the 1 year performance, it is really outshining the MSCI Europe indexes, index ETFs. But then for the 3 years and the 5 year performance is actually a little bit above or a little bit under. So for the 3 year performance is a little bit under the MSCI Europe index ETFs, and for the 5 year performance it is a little bit above. But for the 1 year performance it performs almost double as good as the 1 year performance of the MSCI Europe ETFs. And it pays out 2 dividends per year. It's a UBS ETF, of course. So again, February and August for UBS, and a dividend yield of 2.29%. So that's a little bit lower than the MSCI Europe indexes. And for small caps, that's also more or less to be expected, because you expect them to focus more on growth, so that their dividend yield is a little bit lower than more mature companies. And these are the dividend payments that it made in the past year. So in February it was €0.5 that they paid out, and then last year in August they paid out 2.7360 euros per share. Then you have the ETF that I already discussed in the previous video, the DFE ETF from WisdomTree, Europe Small Cap Dividend UCITS ETF, total expense ratio of 0.38%. You have 18.70 Swiss francs for one share on the SIX stock exchange. It invests towards 390 holdings, and there is 36 million invested into this ETF, so not that much. It's a fully replicated type. The past year it is up 8.84%, the past 3 years it is up 32.62%, and in the past 5 years it is up 73.19%. Pays out 4 dividends per year. As mentioned earlier in the previous video, there used to be 2 payments a year, in January and in July. But they now also started paying out dividends in April and in October, so that makes that they now pay out quarterly dividends. The dividend yield is 4.73%, and here are the dividend payments. So in July they paid out the biggest dividend this year. Then you have the iShares Euro STOXX Small UCITS ETF from iShares, the DJSC ETF. Total expense ratio 0.40%, once again really high, and one share cost 43.29 Swiss francs on the SIX stock exchange. It invests towards 97 holdings, and there is 332 million invested towards this ETF, and it's a sampling type. The past year it is up 10.52%, the past 3 years it is up 27.43%, and in the past 5 years it is up 53.44%. It pays out quarterly dividends, and the dividend yield is 3.14%. And here, once again, in June you have the highest payout of all the quarters, but yeah, that's not abnormal here in Europe. So for the rest, it's actually a quite nice dividend yield for this ETF. And then here you have the overview. So you have IQQG, the large cap ETF from iShares, total expense ratio of 0.40. DJSC from iShares, also with a total expense ratio of 0.40. So it's actually the underperformance of the bunch, and here you can truly see that having a lower total expense ratio has a reflection also on the long-term performance of the fund. So ESCEUA from UBS is the best performer over the past 5 years. But for the rest, I'm not a big fan of large cap investing. I'm not a large fan of small cap investing because, okay, you hope that small caps become large caps, but the chance of a small cap becoming a large cap is really small. So that's why I like investing in towards the best dividend payment or dividend paying companies like CHDVD. That ETF here in Switzerland, it's a really great ETF. It invests only towards 20 companies, but they are the best 20 dividend paying companies in Switzerland. So that's a really great ETF, and I buy that one for my kids. And yeah, when you buy complete the complete market, you don't miss out on the small caps that become large caps. And of course, you also include the small caps that fail, but that's just the way it is. And normally, the small caps that become large caps, they make up the difference. And the problem with small cap ETFs is at one point when a small cap is really becoming successful and it becomes a mid cap and then a large cap, it's already out of the index. So you don't profit from the complete run up of the company, and that's really a pity. So that's why I don't really like small caps. But for the completeness of all the ETFs that I found that invest towards European companies, I included this video because some people really like investing into small cap ETFs and others like investing into large cap ETFs. So that's why I included this video. And with that being said, thank you for watching this one. Please consider subscribing to my YouTube channel. Hit that like button as well. That helps out the channel enormously. And see you on the next one on my YouTube channel. Bye.